GameStop. This is going to be a fun one. So, after taking January off to move across the country, I returned to the internet and discovered the whole GameStop debacle, and I've been watching it unfold in awe. The events of the past 2 weeks will not only have major long-term ramifications for financial markets, but will also hugely impact one of 2021's most hyped companies, Robinhood. If you haven't heard the news already, GameStop stock is all over the headlines for being up over 700% in the past week and up almost 2,500% in the past 3 months, minting actual millionaires overnight. Let's explore what exactly is happening with GameStop stock and why the ramifications will be huge. Quick disclaimer, this video is for educational purposes only, and investing in GameStop right now would be extraordinarily speculative. Don't try this at home. GameStop is a retail store focused on video gaming that was one of the stores suffering most from the decline of retail. Especially in more recent years, the big video game publishers and console makers moved towards digital downloads and away from physical discs. GameStop was not looking so good. Large institutional investors, like hedge funds, realized this and began to place bets that the stock would decrease in value because of the company's perilous situation. Shorting stocks, a practice generally disliked by the public, is commonplace in the financial world. The kicker with GameStop is that the hedge funds got too greedy. They shorted more shares of the stock than actually exists in the market. When something like this happens, it's called a short squeeze. When someone thinks the price of a stock is going to go down, they can short that stock. Shorting a stock involves borrowing a stock from someone else at a predetermined price with the intention to return that stock to them in the future. Then the borrower can turn around and sell that stock to a third party for cash. Now, since the borrower borrowed the stock, the cash isn't fully theirs yet. Rather, the borrower counts on the stock going down in price so that they can buy the stock back at a lower price than what they initially paid for it. When they then return the stock to the owner, they get to pocket the difference. This is how investors make money off of believing a stock will go down in value. However, there is a downside. The danger in shorting a stock comes if the stock price actually goes up, in which case you may have to buy the share back at a higher price than what you originally paid. And theoretically, there is no upper limit to how high the price can go, and in turn, no upper limit to how much cash you can lose on a trade. Since GameStop stock was so shorted, a bunch of Reddit users banded together to purchase the outstanding shares with the hope that if there were no shares available for sale when the shorts came due, they could then set the price as high as they wanted, sell those shares back to the shorts who needed to cover their positions, and in the process make themselves a ton of money. This is in fact exactly what happened. On Friday, January 22nd, the stock soared in price overnight from around $40 a share to over $150 a share before returning to around $80, and the short squeeze began. Then, to throw gasoline on the fire, Elon Musk tweeted about the stock and it went intergalactic, up to a peak of almost $500 last week. So far, institutional investors have lost billions on their short positions, and many early investors in GameStop have realized enormous returns. Robinhood was the main brokerage for many of the Reddit users buying up GameStop stock, and they announced suddenly in the middle of last week that they would no longer allow their users to buy GameStop stock, only sell it. This, of course, manipulated the price by preventing it from going any higher, since people cannot buy more shares, but the price can go lower. It essentially limits the stock from going up in price further. Large institutional hedge funds, however, were still permitted to buy shares through their special connections to the exchanges. This resulted in hedge funds colluding with each other to sell small groups of shares back and forth to each other during the day at lower and lower prices, which drove down the stock price. And retail investors, unable to purchase the stock, couldn't do anything to counter this. Let me be clear. That is explicit market manipulation by the hedge funds, who are trying to cover their butts after their horrible investments shorting GameStop. And it's truly the hedge fund's fault in the first place, because this whole situation would not have happened if the stock wasn't shorted over 100% of outstanding shares. This saga will have massive consequences going forward. First, this has shown how a group of people on the internet with no more than a few $100s each can swing markets just as much as a Goliath hedge fund can. I think everyone involved in the stock market will start paying much closer attention to the opinions of average people now that big institutions realize just how much buying power everyday people actually have. Second, short selling is going to become less popular. While GameStop was a once-in-a-generation event, other heavily shorted stocks such as AMC and Nokia also saw huge price surges last week as retail investors piled into many highly shorted stocks. The public has seemingly turned against short selling, and regardless of what your personal opinion of short selling is, large investors are going to be more cautious about shorting stocks in the future. And because stocks are going to be shorted less, this means there will be less downward pressure on stock prices, leading to more upward pressure on the general market. I expect to see higher and higher prices going forward. Third, Robinhood's actions last week in restricting trades in a way that hurt their customers is suspicious to say the least. Many retail investors are outraged and feel betrayed by the company, whose very mission statement is to democratize finance for all, yet seem to turn against their own customers. Transfer out requests are up more than 800% compared to last week, and hordes of Reddit users and retail investors seem to have turned against them. Robinhood plans to go public in 2021, but this outrage over GameStop might delay that and has, without a doubt, really hurt their reputation. Let me know in the comments if you would be interested in a longer video discussing Robinhood as a company. So, where will GameStop stock go from here? Who knows? It's anyone's guess at this point. The stock is declining again from last week's highs, but it may surge once again, or it may not. No one really knows. What is certain, though, is that the great GameStop debacle will be one of those tales they talk about in business school 10 years from now.